Our newsmaker of the morning, Richard Fisher, Dallas Fed president. Normally, we look forward to having you in studio, Richard, but I think maybe, given what happened this week, we need a little distance from where you are. A lot of times in the past, you've struggled to maybe remain positive about some of these extraordinary moves. Can you really sell this to me today? Are you on board with what we heard about on Wednesday?
First of all, just so you know, I'm in a studio here in Dallas who's set up by Paul Volcker's nephew. So, interesting contrast. But,
it really, and you said it, not me. That is interesting. What do you make? I mean, 85 billion.
Let me hold.
Go ahead.
No, look, again, we are a team. We are a committee. There are some of us that argue against what we decided to do. I was one of them. But the committee makes a decision as a whole and proceeds, and I'll use that as a way of saying it's a very sharp difference in contrast to the way the Congress operates or the way the Congress works with the executive. We have very frank discussions. It's civil. I argued that basically we were at risk of what I call a Hotel California monetary policy, going back to the Eagle song, which is you can check out any time you want, but you can never leave. And that's what I worry about. Theoretically, we can check out any time we want from this program, but we practically, since we're going to have an engorged balance sheet, we may never be able to leave this position. So I had some concerns. I was concerned about the 2.5% mention even of an inflation 1 or 2 years out in terms of expectations. The market become fixated on the unemployment target that we actually it's a threshold, not a target, that we put in there. But I lost my arguments. There were others that argued similarly. I'll let them speak for themselves. But here's the thing. The committee makes a decision under the leadership of Ben Bernanke. This is Ben Bernanke's Fed. It's his legacy going forward. And then we leave the table and we're still friends. So can I sell it to you? I can't sell it with passion. But I will say that this is action in a city called Washington, or sometimes in Texas we call it Washington Stan, where people never get anything done or don't appear to be easily able to get things done. We do get things done. We make a decision and we proceed. So I think that's one thing you can say about the FOMC, and particularly under this chairman's leadership. We're going in new directions, and the question is the efficacy of what we're doing solid or not? We'll continue to examine that, and if it's not, we're going to have to change course. I mean, that's the best I can tell you, Joe.
Yeah, I understand. And you're a reasonable, calm, conciliatory, collegial. The Fed is very collegial, but I would at some point wonder whether you might just snap, because you've been on in the past with much less significant and much smaller actions were being taken that really raised your eyebrows, and that we know you really weren't behind. And maybe it's as it keeps happening, nothing surprises us anymore. It's like, when we were going to do another $40 billion a month, you didn't really think that was that great of an idea, and that was going to be for maybe 9 months or something. But then to go to 85, basically where you're assuming the unemployment rate gets down to 6.5, we don't even know if that's going to happen. It's almost like a permanent $85 billion a month. When do you just say enough? I cannot just sit here and be collegial. We're out of control here, Mr. Chairman.
Well, I will always be collegial, and I think everybody at that table will always be collegial. I thought we had done enough already. Businesses are awash in liquidity. I don't know a single
said that a year
business
ago.
except for 2% of the National Federation of Independent Business, small, medium-sized businesses. Those are the ones it's that low now that feel that they either need better access to capital, they need more capital, or want more capital. And then you go all the way to the big guys. The one thing you can say, Joe, is we have led the re-leveraging of corporate America, public and private. The cost of funds is nil. Their balance sheets are much better structured. Disney issued, just before our meeting, a 3-year note at 45 basis points. It tied Texas Instruments for the all-time historic low. So we have a very fit business. Here's my argument. We've done enough. And Mario Draghi made the same argument the Thursday before our meeting, that we had done much. It was now up, as he said it, the head of the European Central Bank, is now up to those that created the unemployment problem to solve the unemployment problem. I believe that it's not monetary policy that's holding back employment. I believe that there is a question of efficacy about the purchase of treasuries actually leading to real economic activity. But one thing I and my colleagues are certain of, the balance sheets are in much better shape. Business is ready to roll. They need final demand. But most importantly, what they need is clarity and the rules of the road. And who do you turn to for that? You turn to the fiscal authorities. And unless we could print all the money imaginable, no one's going to deploy it to create new jobs. And this is driven by a need to fulfill a congressionally given mandate to us that we have to work on two fronts. Price stability, which we have right now. Even by the Dallas Fed standards, we calculate things differently. It's running less than 2%. That's not the issue, inflation. And I am a hawk, but that's not the issue right now.
Right.
The issue is the second mandate, which Congress gave us, and we have to act under the law. As long as we have that mandate, we have to move in that direction. But we're not the obstacle. The obstacle is nobody knows what the rules are, so that therefore they can't plan their investment. But that goes back to the House, the Senate, and the executive. I think doing more, in my book, and I'm in a minority, but in my book, just encourages these people on the Hill not to get their job done.
Richard, we in the past, we worried about commodity inflation, and we actually may have seen some in the oil markets. Now the Fed has cover because Europe's weak, and now Draghi's on board, and it's like beggar thy neighbor. No one, the dollar doesn't necessarily go down with this. But you also used to get some benefit from announcing QE. The market would do something. It was down 3 points after 85. It's like the benefits are gone of doing it. It almost seems like. And what you said about
that's the question.
The Roach Motel, you're never going to be able to check out with a $7 trillion balance sheet.
Yeah, it's actually Hotel California, by the way. I mentioned it because Don Henley, like everybody else who's good, Don Henley's a Texan, by the way.
But the Roach Motel is even better because the roaches go in there, and then you find like 12 of them, and none of them are ordering room service anymore. Anyway, go ahead.
Look, there was a muted response. There's a lot else that's going on right here. I mean, everybody's fixated on two things. One is the fiscal cliff. The other seems to be Susan Rice. I'm withdrawing my name, by the way, for nominee for whatever. But that seems to be the news cycle right now. And it was muted. You never know when people have already positioned and are unwinding their positions because we either disappointed or achieved what market expectations were. So I don't look at things in terms of the immediate response. But I would argue personally that the efficacy of these programs, their impact, is declining over time. We will be, as a committee, and the staff will continue to look at this and monitor whether or not this is actually having a positive impact. But it's clear that with each new announcement, there's less of a reaction. You have to be very careful in terms of judging this reaction because this is a relative game. The dollar strengthened, didn't weaken, so that would send an immediate signal that we're maybe not getting the foreign exchange effect we would like. However, I don't think you can judge things based on 2 or 3 trading days activity. And remember, the competition is much weaker than we are. We are the strongest economy in the world right now. We have the best American operating businesses ever. And we're ready to roll. If Congress would just liberate our businesses to go out and create jobs and invest in new CapEx, which we can afford to do now. And part of that is, I have to admit, thanks to the Federal Reserve.